overlooked AP internal control issues and how to prevent them. Brought to you by the Controllers Council. My name is Neil Brown, Executive Director of the Controllers Council. And before I introduce you to our expert speaker, I want to mention some brief housekeeping items and share a brief word about our sponsor. First, this webcast is CPE eligible, so please answer all 3 polling questions and attend for at least 50 minutes to receive your CPE credit via email after the webcast. If you're not interested in CPE, please answer the questions to compare against your peers. Second, we'll have a Q&A at the end of the presentation, so please use your GoToWebinar control panel to ask our expert questions. And finally, you'll receive a link to this webcast via email in the next 24 hours, so no need for notes or screenshots. So with that, I'd like to say a word about our sponsor, Bill.com. Bill.com is a leading provider of cloud-based software that simplifies, digitizes, and automates financial operations for small, medium-sized businesses. And additional solutions include expense management platform Divvy and mobile invoicing product Invoice2Go. SMBs worldwide use Bill.com solutions to manage end-to-end financial workflows and payments. Learn more at Bill.com. So with that, I'd like to introduce our speaker, Mary Schaefer. Mary is founder of AP Now and host of the AP Now podcast and YouTube channel. She's the recipient of Lifetime Achievement Award and Top Influencer Awards from the AP Association. And she's author of more than 20 business books, including 127 best practices for accounts payable. She writes e-zine twice a week and is a frequent speaker on both online and live events. She holds a BS in math and an MBA in finance. Mary, welcome.
Thank you. Thank you. Alrighty, so today we are going to go through information about internal controls. We're not going to talk about every single internal control that you could have, that you might want to have in place. That would probably take all day, and to be perfectly honest, I've done all-day sessions on it. But what we're going to talk about today are items that, at least in my experience, companies overlook, and when they overlook these areas, trouble ensues. Okay, and then we're going to talk a little bit about controls that you should be putting in place to plug these weaknesses. We'll talk about it as we go on, or as we go through the items, and then a little bit at the end, and we'll talk somewhat about best practices. It's not possible, to be perfectly honest, to hear a talk from me about accounts payable without me talking about best practices. And what I like about best practices is they integrate very tightly with internal controls. If you don't have tight internal controls, then it is not a best practice. So with that, let's dive right in. And I think we might have our first polling question, Neil. Am I right? Yep. Okay.
Yeah, so let's do this poll. When you apply cash, do you apply it to the invoice the customer indicates it's paying or the oldest invoice? So let us launch that poll.
And I'm really interested in this. I know what the answer is, Neil, what's the best practice. And I also want to talk a little bit about what goes wrong when the best practice isn't used. And I'm just looking at some of the comments. No, there is no coffee today. unless you have brewed yourself a cup before you sat down. All righty, so. I know, Neil, you think that I can see numbers someplace, but
under the poll row there. So we got about 70% voted. We'll just give it a few more seconds.
Okay. Oh, I see what you want me to do. Oh, okay. All righty. So I see that most of you are doing what is the best practice or whatever the customer indicates. If you either use the oldest invoice or if the customer doesn't tell you use the oldest invoice, I understand why you would do that. But at the end of the day, that's going to cause you more problems when you try and reconcile the account and when you try and figure out which invoice has been paid and which one hasn't been paid. And all this not only creates more work for both you and your customer, but also will lead to discrepancies and a lot of problems. So really apply the cash to wherever the customer tells you to apply it. If the customer says I'm paying invoice 123, then apply it to invoice 123, even if invoice 4.6 is older and hasn't been paid, because the dollar amounts aren't going to equal. All right, I'm going to stop talking about that. And Neil, we're going to move on to our introductory material. I just want to talk a little bit about why internal controls matter and why we make such a big to-do about it. So when you don't have strong internal controls in place, what you can end up with is fraud. To be honest about it, weak internal controls facilitate fraud. And while you may not realize it, when you have weak internal controls in place, and let's say you make a duplicate payment, and it was an honest mistake, you didn't pay on time, and then the vendor sent another invoice, and somehow the two invoices got paid. Now, you would hope that the vendor would send the duplicate payment back, or at least give you a credit on their books for it. But in reality, what will happen is at a few vendors, a light will go off and they'll say, oh, these guys don't have their act together. They don't know what they're doing. And then they not only don't return the payment, and they don't give you a credit for it. They say, oh, I'm going to start sending a second invoice. So that honest mistake kind of triggers future fraud, so the fraud can grow. Obviously, you're going to have duplicate payments. Another reason for us to make such a big deal about strong internal controls. When you make duplicate payments and they're not returned or you don't get credit for them, this can lead to your organization being less profitable than it might be otherwise. And if your controls are really weak, you'd be surprised how many of these duplicate payments you'll make. And then you can also have regulatory issues. Any of you that are with a public organization and subject to the strictures of the Sarbanes-Oxley Act know that this can lead to problems. So internal controls matter, not only so that you can be more profitable, not make extra payments, but so that you can have more efficient accounts payable function. Okay, I want to talk a little bit more now about the duplicate payment issue and what that means to your organization. So as you can see on the next slide, when we start talking about duplicate payments, okay, next slide. All right, I'm going to just start talking about it. It's probably taking a minute or two for the slides to advance. So when we start talking about duplicate payments, as I kind of indicated earlier, few vendors actually return that payment. They kind of just hold on to it. So it's going to, even if you want to get your money back, you're going to have to take some extra effort. You're going to either have to hire an outside firm, or you're going to have to use some of your own internal resources. Now, you're saying, but most of our vendors issue a credit memo, and yes, they do. Some of them will issue a credit memo. In fact, a good number of them will issue a credit memo. But here's what can go wrong with that. A, they may not send it to you, number one. Number two, they may send it to you, but when they send it to you, you may not receive it. They may send it to purchasing. Somebody in purchasing doesn't know what to do with it, so they don't send it on to AP, and therefore you don't get the credit for it. Or in a best case, or really worst case scenario, they do send it, but you don't know that your processes in AP have not been trained adequately, or maybe you have a new processor, they don't know what to do with the credit, and so they end up paying it. So now you had a credit for $100, and it turns out that